whether that company A owns, 100% or 50% or 60%, it is immaterial. So when you are consolidating, you consolidate everything. Okay. But then you will say how it is, possible if I'm controlling another company by 50%. So then I should actually add only 50% of the assets of one company to another company. Holding company should add only 50% assets. Okay. So how do we manage the accounts and how do we show that in the financial statements? Okay. Fine. So that is what we are going to touch. Now it's a very simple case. So there is a balance sheet here. Okay. So there is a balance sheet of, these two companies. I'm going to share this, slides also with you. So there is two companies, X Limited and Y Limited. Ansh, please listen. I'm going to ask some questions from you. Okay. So X Limited has building. So the balance sheet shows that there's a building, equipment, stock, debtors, and bank balance. So their X and Y assets are given. So a building is worth 40,000 rupees for X and Y it is 10,000. Similarly, we have other assets. Okay. Then creditors, then total. So what is the total liability side? 1,08,000. Okay. Then we have equity, shares, reserves, and total. Is that okay? So the balance sheet is tied up, isn't it? So both the companies' balance sheet is given on the screen. Okay. And there are reserves of 8,000 and 4,000. Okay. So if I ask a question, how the reserves are created, how the company creates a reserves, any answers there? Company के reserve कहाँ से बनते हैं? Just give me one. Yeah. Which one? Retained profit. So whenever the company is earning profits, it may or may not declare all those profits as dividend. So whatever is retained by the company goes to the reserve. Okay, fine. So over the years, if the company has earned profits and not declared all the money as dividend, so it will sit in the reserves. So what is the other way out? This is one way. Okay. Second, reserves. Can you tell me one more method through which the reserves are created? So what is the other line item? One is basically retained profits. Yeah.
Selling assets.
Which one?
Assets.
Assets. Assets are always shown separately in the asset side.
By selling.
On reserve by selling.
Assets.
By selling assets. By selling assets. So that will go to the profit loss account. वो तो profit loss account reserve में तो आ ही गया. So tell some other way, that which is we have not even discussed at all. Now selling assets, that means company is earning some profits. So profits are already, to the extent they are not declared as dividend, they are going to reserve. So that we have already he has covered. Okay. So give me another way.
Long-term investment.
Huh? Which one? Long-term investment return. So that is again by selling assets, what he's saying. So another way can be share premium. Whenever a company is, issuing fresh shares. Okay. That means if a company is already listed and company wants to share new shares. Okay. They issue shares at premium. Isn't it? 10 rupee share is issued at say 100 rupees value. So 90 rupees premium, which is collected, goes and sits in the reserves. Okay. Right. What I'm saying is that, whenever a company which is growing needs more money. Okay. Whenever it needs money, either it can issue shares to the new shareholders, it can come with an FPO. So that is called FPO, further public offerings. The first time when a company raises money, it's called an IPO. It becomes listed. Subsequently, the company may need more money. So company has two options, either to, issue shares or to borrow money from the bank or issue bonds. Okay, that's also borrowing. So when a company issues shares to the public for the subsequent time, other than the IPO, it's called FPO. So whenever the company is issuing shares, again, now company has already become a big company. Okay. So already the shareholders, are there in the company. There's a balance sheet, as liabilities and everything. So the new shareholders will become the owners, equal owners of the entity, or all the assets which are owned by the company after the public issue is over and shares are allotted. Okay. So a company will issue a 10 rupee share or a 5 rupee share, whatever the face value. It is not going to issue at face value. Okay. It is going to charge some premium depending upon the valuation of the company. The more the valuation, more the premium. Okay. So when the new shareholders, they pay the premium, now they have equal rights on all the assets and liabilities of the company, of the combined entity. because they have paid the money to enter the company. Okay. Suppose you two people are doing business and you have already have say 1 lakh rupees in your business. So you bring, Ansh into your partnership. So he's going to own your 1 lakh rupees, isn't it? So you say, okay, you bring some money as a premium. So then only will allow you to participate in whatever we have. So that premium will go to reserve. Is that okay? Is that okay? So these are the two ways through which we can create premium. I mean, reserves. There are other ways also which you can learn, and I'll share them later on. But these are two retained profits and share premium. So these are two major. 80 to 90% of the money comes from these two sources in reserves. Okay, please focus here now. Now, this is the question which I'm showing. Okay, this is the transaction which has happened. X Limited purchased 60% of the equity shares of Y Limited for rupees 29,000 by paying by check. So what X did was X bought 60% shares of Y Limited by paying how much? 29,000. So X Limited has acquired 60% stake in Y Limited. So X becomes what? Holding or subsidiary? Holding, and Y becomes subsidiary. So because it has more than 50%. Okay. When now next year, when the company makes the balance sheet needs to be combined. It's called the consolidated balance sheet. Okay. So X owns 60% of 40,000. Because if you go back to this, look at the equity and reserves, 40,000. This is 40,000. Okay. 40 है ना? 36 is equity shares, 4,000 is reserves. So all the money which belongs to equity shares of Y Limited, 40,000. So what they have paid? They have paid 60% to acquire 40%, 60% stake. So X owns 60% of 40,000. Is that okay? So that means equal to how much? 24,000. जो 40,000 की equity है, which is equity plus reserves, they own 60% of it. Ansh, please listen. So how much they have paid? So they have paid 29,000 to acquire how much stake? 24,000. So how much extra they have paid? 5,000. And that is called what? Goodwill. Of course, premium, but it is called goodwill because it is not an FPO or an IPO. So this will go to goodwill. So they have paid some extra money than what they are supposed to pay. So, and that's it's almost like a premium, but it's a goodwill. So then what is the minority interest? That means if they own 60%, okay, then what is left? 16,000. So 16,000 worth overall equity doesn't belong to X Limited. It belongs to Y Limited minority shares, okay, or a non-controlling interest, we can say. Okay, we can say NCI, non-controlling interest. Is that okay? How much? 16,000. Remember that. And how much is the goodwill paid? 5,000. Just focus here. Ansh. So how much goodwill company X has paid to acquire Y? Huh? How? Just show me the math. Just tell me the two numbers. Just from here only it is there, na? 29,000 what they have paid, and how much worth of goods they have bought? 24,000. So how much extra they have paid? 5,000. So the shares of Y Limited was worth 24,000 and they paid 29,000. That means they have paid 5,000 rupees extra. So it will be shown as goodwill. Is that okay? It is goodwill. Fine. Now I'll just take you to the Excel sheet where I've done the calculations of consolidation so that it becomes easier. And I'll share that Excel sheet with you. So I'm just, I'm just sharing these slides and an Excel sheet. So please open them. So I'm sharing both the slide as well as So just open this Excel sheet which I'm showing. Just hold on, like मैं डाल दूं, फिर आप आ जाओ. हाँ, अब बोलो.
एक्चुअली मैं हॉस्टल पढ़ी हूँ
हाँ
एक्चुअली मैं हॉस्टल पढ़ी हूँ फर्स्ट ईयर्स के लिए तो मेरे को वार्डन बुला रहा है इमरजेंसी में तो मेरे को
हाँ हो.
अटेंडेंस के लिए मैं
Okay, so just open this Excel sheet which I've shared. Just open that on whatever you have, mobile or whatever. Okay, fine. Excel sheet आ गई आप लोगों के पास? Have you all got? Have you all opened? No, there is an Excel sheet also which I have sent. एक Excel sheet मैंने भेजी है, उसको ओपन कीजिए. NCI. Okay. Now, if you look at the first sheet, there is a balance sheet. Can you see the balance sheet in the first? Okay, so now we are making a consolidated balance sheet. Okay. Now there is a goodwill here. First item will be goodwill. How much? 5,000. So from where I picked up, I've gone to details. Okay, details L8. So this is 5,000. So X paid 29,000 for the shares which was worth 24,000. So therefore goodwill is 5,000. So I have just put a marker here. Okay. So if you can just see the formula, it is coming from the sheet, other sheet. ये ठीक है? Is that okay? Then building. Building is the combination of 40 plus 10. So if I say how I've calculated, it is calculated by taking 40,000. Very good. So when you look at the building of the consolidated company, just look at this here. Is it okay? 40 plus 10, 50,000. Okay. Then we have equipments. Okay. If I say this thing, it is 25 plus 20. So what I'm doing, I'm consolidating balance sheet of both the companies. Is that okay? Then we go further. Then, so this is the total. Okay, fine. And stock, if I say this, the stock will be 5, 15 plus 6. Is that okay? Then the debtors will be 10 plus 3. Is it clear? Then, so this is the bank balance is 5,000. What is the bank balance here? 30 plus 4. The bank balance is 34, should be 34, but I have shown only 5. Why? Because X has paid 29,000. So the balance will come down. So if I say formula, then it will say both and see the formula at the top minus 29,000 there. So add the bank balance minus 29,000. So the bank balance has gone down to 5,000. Is this clear? Clear? There at the back. So how come the balance is 5,000? 5,000 kaise balance? Sudhanshu, have you got it? So here the bank balance should have been 30 plus 4. Bank balance was 30 plus 34. But I have written only 5,000. Why? How? 5,000 kaise balance hai? Clear? 5,000 balance kaise hai? अभी तो पहले back somebody को किया काट के दे. How the balance has gone down by calculation? 5,000 balance कैसे आता है? 2,000 balance का देखिए कि what 34,000 but balance is now coming to only 5,000. Look at the formula happening here. But this is X is what? Shares and pay 29,000 to buy share to the bank balance will come down. So if you look at here, so what has happened? These plus this minus 29,000 because 29,000 was paid for acquiring shares of Y Limited. Is that okay? तो सुनते क्यों नहीं हो पीछे भैया? Riya, what are you doing when I was asking? Huh? इधर आ जाओ Riya. Come this side. And next time if I don't answer, you don't answer ना, आपका 0 marks हो जाएगा. All your मेहनत will go बेकार. Okay. everything what I'm talking is getting recorded. Fine. So what I have to do, I have to do a lot of editing so that I don't bring all those conversations into recording. Okay. Now the creditors. Creditors are what? 15,000, which is, please focus here. So Danshu, please keep focusing. I'm going to ask some questions from you also. So creditors are how much, Sudhanshu? Huh? And how the 15,000 has come? 12 plus 3, 15. So it is what? It's consolidated balance sheet. So we are consolidating and adding both the creditors is as simple as that. From Uttarakhand. Are you following? समझ में आ रहा है? Okay. Then, so this, when I total everything, it will become 1,24,000. Now, if I add all the assets of both the companies, everything including goodwill, it will be. Now, equity shares. Equity shares. Now, please focus here. नहीं अब बैठो यहीं पर. अगर चले जाओगे तो अंदर नहीं आने दूंगा. आ जाओ. Just for 1 minute. Just answer me this question. So, equity shares of the consolidated entity. How much it will be? How much it should be? What is the equity shares of X Limited? 1 lakh. And what is the equity shares of Y Limited? So we will now, this is a consolidated balance sheet of the holding company X Limited. So we won't take the shares of Y Limited. We will take only the shares of X Limited. Because it's a consolidated balance sheet of the holding company. उसके शेयर तो एक ही है ना. तो ये, this will not get totaled. Okay, fine. So remember, the equity will not be total. Just hold on. Okay. Similarly, when we look at reserves, okay, reserves will be also of X Limited. No reserve of Y Limited will appear in the balance sheet of consolidated balance sheet of X Limited. So because what we are making is a consolidated balance sheet of X Limited. Okay, just hold on. Let me complete and then you can ask the question. Okay, you just wait for some half a minute more before you ask any question. Okay. Now, this is 1,08,000, the share capital plus the reserves. Now, the non-controlling interest you have to put in the balance sheet because all these assets have been combined. So there are some shareholders who own the part of the assets. So for the company, it's a liability. For a consolidated entity of X Limited, so X Limited owns 16,000 rupees to the shareholders of Y Limited because they have consolidated all the assets of the company. Okay, सारे assets हमने मैं दिखा दिए, तो सारे तो है ही नहीं. So they have to show some liability to match the balance sheet. Now, if you look at the balance sheet, it matches here. So it is 1,24,000. And if you look at the now this is the consolidated balance sheet of X Limited. Okay, where we I'll just remove all the arrows here. Okay, and then we say the total of asset side is 1,24,000, and the liability side is also 1,24,000, isn't it? Now, when we consolidate, the balance sheet should tie up. Okay, so what we are ignoring, the equity and reserves of Y Limited, they won't get combined. But instead of that, we'll have the NCI, non-controlling interest. Okay, if we put up that and the goodwill, then the company's balance sheet will exactly tie up. 16,000, if you look at here, that's a good question. So this is coming from here. So this is, they non-controlling interest, that is 40% of 40,000. So total 40,000 is the equity plus reserves of Y Limited. Of that 40% is non-controlling interest for X Limited. X ka to wo non-controlling hai, or we can say minority interest. Earlier we used to call it minority interest, but now the new name is non-controlling interest because the accounting standards use the word NCI, non-controlling interest. So this is not the interest of, these are not the shareholders of X, this thing. So since X has consolidated everything, as if everything belongs to it. So they have to show some liability towards the minority shareholders or the non-controlling interest holders. Okay, so they are called NCI. Okay, is this clear? Clear, Jay?